Okay, now, consumer price inflation rose to a new three-year high at 11.4% year-on-year from 11.1% the previous month. Well, the figure was calculated on a rebased index with fresh items for a second month. To review these numbers, I'm now joined on the line by Razia Khan, the head of Africa Research at Standard Chartered. Well, thank you so much for joining us, Razia. Well, last month, you said the price effect of removing fuel subsidies in May had yet to filter into the figures. Now, June CPI rose to 11.4% year-to-year from 11.1% in May. Now, would you say we are beginning to see the price effect of subsidies removal now?
Well, there are a few things that are going on with the Ghanaian inflation data. As you know, the index that we've now got has been rebased to last year. It's been reweighted. And so we're seeing changes in the overall composition of the basket. Interestingly, though, with the release of the previous month's inflation data, the Stats Office in Ghana released some of the back data this year. And unlike the very pronounced impact that we saw from the bigger February fuel price adjustment on Ghana's inflation data, it's not really that evident with the new rebased, reweighted data. Now, of course, there was a further fuel price adjustment in Ghana in May, but that was relatively small compared to that 20% fuel price hike that we saw earlier this year. We do, of course, expect that eventually we're going to start to see some of these pressures showing up in the inflation measure, so the expectation is that inflation rises even more.
Right. When you say even more, how much can we anticipate, going forward? Because that doesn't seem to be easy enough.
Well, the difficulty that we have is that we're now working with a rebased, reweighted CPI index for which we do not have a lot of history. As far as I can recall, the underlying index numbers have not yet been made public by the Ghana Statistics Office. What this does mean is that it's very difficult to project exactly how much higher we go because we have no historic context. We have nothing to base it on. But looking at Ghanaian fundamentals, the currency is weakening. There's substantial efforts going on to try to achieve some measure of fiscal consolidation, and that will mean not only the removal of fuel subsidies, potentially utility price subsidies as well. The majority of influences do seem to indicate inflation goes higher. How much higher is difficult to say at this point.
All right. Now, one thing you also mentioned earlier was the fact that the kind of pressure seen on the cedi will continue to push inflation in an upward trend. Now, what is your outlook for inflation going forward, bearing in mind that the cedi is now down about 6.9% year to date?
Well, the very interesting thing about Ghana's inflation experience last year was that despite the tremendous pressure that we saw in the currency in the first half of the year, very little of this actually seemed to filter through into inflation. It may just have been that the inflation index needed reweighting, that it wasn't very useful at measuring current price pressures, and the hope is that the new index that we're working with starts to give us a more accurate idea of the feed-through of exchange rate weakness into inflation. One would expect, of course, given that the Ghana cedi remains pressured, Ghana still has a substantial trade deficit, a current account deficit, that this is not something that Ghana will be able to turn around very quickly.
All right. Well, seeing as you think inflation will further pick up in the months ahead, do you think this course vindicates the Bank of Ghana's decision for further tightening?
Absolutely. I mean, we saw that 100 basis points tightening by the Bank of Ghana earlier this year when few others in the market had anticipated it. Given that we're still seeing inflation climbing, we know that at the Stats Office there is the belief that when we get into the harvest months, traditionally that means downward pressure on food prices, and that has a mitigating impact that should soften overall price pressures in Ghana. Nonetheless, we think that the Bank of Ghana will remain wary of inflation risks and will be watching this, will be monitoring price pressures very closely.
Right. Now, what do you think we might be seeing at the next MPC?
For the MPC meeting to be held in July. We don't necessarily anticipate any further rate tightening because it's been so soon since the last MPC meeting when we did see that surprise hike by the Bank of Ghana. However, if inflation continues to climb, if the Ghana cedi should remain pressured, then that might change the outlook further out for the Bank of Ghana's prime rate. For now, though, we do see in the very near term a greater likelihood that the Bank of Ghana perhaps remains on hold.